All right, imagine this. You bet billions, billions with a B, of your company's money on a huge new idea. But instead of praise, you get publicly attacked by some of the most powerful investors on Wall Street. Well, that is exactly what's happening right now to the real estate giant CoStar Group. Their massive bet? A website called Homes.com. And let me tell you, investors are furious. They're not just unhappy, they're claiming the company is literally destroying value. So, what this whole thing really comes down to is a pretty fundamental question, right? What happens when a company's big, bold bet just goes wrong in the eyes of its investors? You've got this classic showdown: leadership's long-term vision versus the shareholders' demand for returns now. So let's dive in and really unpack how this fight is playing out. Okay, so here's how we're going to break this down. First up, we'll look at why this corporate giant is under fire. Then, we'll get into the nitty-gritty of the investors' case against them. After that, we'll hear CoStar's side of the story, their long game. And finally, we'll talk about the massive crossroads the company is at right now. All right, let's kick things off with part one: a giant under fire. The battle lines have been drawn. So, on one side of the ring, you've got the incumbent, CoStar Group. These guys are a powerhouse, a real titan in the world of commercial real estate data. And on the other side, the challengers. We're talking about some heavy-hitting activist hedge funds, specifically D.E. Shaw and Third Point. And, just so we're clear, these aren't the kind of investors who just sit that quietly. Oh no, they're famous for launching these very public campaigns to force huge changes at major companies. So what's the big deal? What's at the heart of this whole conflict? Well, it all circles back to CoStar's massive multi-billion-dollar gamble to break into the residential real estate market with their website, Homes.com. The problem is, this move is costing an absolute fortune, and as a result, the company's stock has been taking a nosedive. And you can bet that has made these investors absolutely furious. Okay, that brings us to part two, the investors' case. Let's really dig into their side of the argument, which they laid out in a pretty scathing public letter from D.E. Shaw. Yeah, these investors, they do not mince words. They basically boiled down their entire argument to just three: shareholder value destruction. I mean, think about that. In their view, what CoStar is doing isn't just a bad bet, it's an active campaign of financial self-sabotage against the very people who own the company. And believe me, they brought the receipts to back it up. Just look at this number. Over the last 5 years, CoStar's total shareholder returns have landed them in the bottom 10% of the entire S&P 500. Seriously, let that sink in for a second. That is a brutal, brutal statistic for any CEO to have to stand up and defend. And it gets worse, especially if you bought the stock recently. D.E. Shaw points out this staggering fact. Basically, every single shareholder who purchased CoStar stock in the last 5 years has lost money. This leads them to a pretty damning conclusion. They're saying the company's famous track record of value creation is, and I'm quoting here, an artifact of history. Ouch. All right, now let's zoom in on the numbers for Homes.com itself, because this is where things get really wild. The company has burned through more than $2 billion in losses on this venture. And what's the return on that huge investment so far? A measly $80 million in annual revenue. And to top it all off, they're now saying they don't even expect to be profitable until 2030. You can see why investors are just running out of patience here. And the blame isn't just on the strategy itself. It's aimed squarely at the top. The investors figure this whole uncertain mess has vaporized about $11 billion in value. They're also calling out what they call lavish CEO perks, like a ton of personal use of the company jet. And then there's the fact that the CEO himself has sold off about $27 million of his own stock. To the investors, it looks like the board is just nodding along, rubber stamping everything without any real oversight. But you know, every story has two sides, right? So let's flip the script. Let's get into part three, CoStar's long game. How in the world is the company defending itself against this all-out public assault? Well, CoStar is definitely not taking this lying down. Their public response was sharp. They called the whole activist campaign a dangerously misguided effort. So they're basically painting these investors as reckless outsiders who just don't get the business and are trying to force a short-sighted move that would actually hurt the company in the long run. So what's CoStar's big defense? It's actually pretty simple. Hey, we've done this before and it worked. The core of their argument is that this is their proven playbook. They point to their huge success with Apartments.com, which, by the way, also required a massive long-term investment to get off the ground. Their message to investors is basically, trust us, we know what we're doing. Just be patient because this is how you build a billion-dollar business from the ground up. CoStar is doubling down. They insist that Homes.com is absolutely vital for creating long-term value. They're arguing that pulling the plug now would be the real act of value destruction. And to back this up, they say they've met with over 300 other shareholders who are totally on board with the plan. They're really trying to frame these activists as just a loud but very small minority. So that brings us right to our final section, the crossroads. We've heard two totally opposite stories about CoStar's future. So where do things stand today, and what's really at stake in this high-stakes corporate battle? The activists aren't just complaining. They have a very clear three-step plan they want to see happen. First, they want CoStar to find another path for Homes.com. Sell it, spin it off, whatever. Get rid of it. Second, they're demanding a drastic cut in spending, enough to get the business to break even by 2027, not 2030. And third, they want new independent directors on the board to provide some real checks and balances. And to make their plan a little more tempting, they're dangling a very, very big carrot. The investors estimate that if the board just follows their plan, it could unlock more than $10 billion in shareholder value. Now that is a huge number, and it's specifically designed to get the attention of every single person who owns CoStar stock. And you can feel the pressure building. The company's stock just recently hit a new 52-week low, which puts the board in a really tough spot. I mean, they have to either start delivering results that prove their long-term vision is the right one, or the calls to change course are just going to get louder and louder. In a way, the stock market is voting on this strategy every single day. And so, this whole messy, high-stakes fight comes down to one final multi-billion-dollar question. Is CoStar CEO Andy Florance a visionary? Is he making a bold, calculated bet that's going to pay off massively down the road, just like his past successes? Or are the activists right? Is this just a value-destroying pipe dream that needs to be shut down before it does any more damage? The fate of a massive company and billions of dollars is literally hanging in the balance.